We're here at 221 Main Street, San Francisco, and whenever I see a playground like over there, I want to go up and down on a seesaw, but that's not what we're here to do today. Today, we're here to interview another venture capitalist for the 42 Question series. This time, Javelin. I guess, oh, it's open. How about that?
Hi.
It's good to see you, Jed.
Good to see you.
How are you?
Welcome to Javelin World Headquarters.
Yeah, thank you very much. I know you're just moving in to the space.
As you can see, we haven't even hung our art yet. But,
yeah.
We moved in a couple months ago, wanted a little more space, some extra conference rooms, some room to throw events. I'll show you around in a minute. The art, though, is just some posters from some of our companies showing off what they do. Famous, Thumbtack, Fair, Masterclass.
Yeah, wow. Can you take us around a little bit?
Sure,
show us
follow me.
What we have here?
So you got here a little early this morning.
Yeah,
but,
I know. Thank you for meeting with us so early.
So we just built this space out, and in the middle we have our admin help as well as EIRs and interns that'll be in this area. Kitchen area. Along the wall we have offices for the partners and associates and our finance VP and our head of talent who helps our companies with their initial recruiting efforts. Yeah. Getting that first group of leaders together is just such a big factor in if the company ends up succeeding.
Yeah.
And she's been fantastic at that.
Yeah.
Our offices are down there.
You've got beautiful conference rooms, beautiful view of the Bay Bridge there.
Yeah. This is the killer view.
This is a killer view. I am going to have to dwell on this view. Do they make you pay money to have a view like this?
Yes, they do.
This actually doesn't feel like a view. It feels like a painting. It is just spectacular.
Yeah, on a day like this, it is nice to have.
And tell me about the firm. How many partners do you have here?
So there's 3 partners.
Yeah.
Javelin's been around for about 9 years now.
Yeah.
We're on our 4th fund.
Yeah.
Current fund's 125 million. Yeah. In total, we manage about 500 million.
Wow.
Probably made about somewhere between 50 and 60 investments.
That's great. So you are a seed and Series A investor?
We are. We're mostly Series A. So our sweet spot is that first $3 to $5 million, which we call Series A.
Yeah.
First institutional funding. We do some seed if we either already know the entrepreneur or we have a pretty good feel that we want to either lead the A or be a big participant in the A.
Yeah.
We've done some Bs. We've done some later stage if it's truly an amazing opportunity that we just really want to be in.
Will you also follow on in pro rata on your Series A investment into the Series B?
Yeah, whenever we lead the Series A, we're saving a lot of reserves for follow-ons later.
Yeah.
If our entry point is much later, then that might be our only investment, but that's pretty rare.
And how many investments would you have in a given fund, and would you make in a given year?
On average, we've made 6 or 7 in a given year.
Yeah, amongst the 3 partners.
Amongst the 3 partners.
Yeah.
Right, that's typical.
Yeah. Would you say that there is a concentration of areas that you look at?
No, there isn't. Is the short answer. And different funds take a different approach to this.
Yeah.
For us, if we look back on the top 5 investments of our last 50, they are not things we would have found had we started with the sector. Right? It's something where the entrepreneur came in and blew us away on an idea, a business that we wouldn't have thought of. Maybe it's in a general sector of marketplaces or software, but an industry we weren't focused on, and they came in and just blew us away. It had all the elements we're looking for. It was a massive market. It was some great competitive barriers that are going to last a long time.
Yeah.
The team knew what they were doing. Capital, efficient, scalable, things that are important to us. And the type of thing where we find ourselves still thinking about it at 10 o'clock at night, the day after the pitch.
What are the things that make you sort of sit up and say, this team has the traction or has this experience base that makes me want to back them?
Yeah. So it's part just their knowledge base of what they're about to go into, and do they really understand the dynamics, the full chessboard. And part of it is, for lack of a better phrase, a sophistication. And I don't care if the entrepreneur is 22 or 42, doesn't matter. Can they recruit well? Can they raise money well? Are people going to want to work with them and partner with them? Can they handle a complicated biz dev transaction? All the things that help a startup work. And do we like working with them? You know, is the constant flow of ideas back and forth and feedback back and forth, is it working? Does it feel right?
When a founder meets you the first time, do they have to have a product already sort of prototyped? Is it, you know, what state of the, would you have?
So typically for our Series A investments, there would be something there. They've built something, there's some early signal that there's demand for it, that it's, you know, it's hard to build, frankly. It's not going to be easily copied.
Yeah.
There's some advantage they're going to be able to sustain.
And those early signals, you know, would you quantify that differently in a consumer or SaaS business than you would in other, you know, businesses?
Sure.
How would you, what would you be looking at for early signals?
So with SaaS, it might be more, what is the sales cycle looking like? You know, what are the early customers saying? Are they spreading the word to other potential customers? It doesn't have to be a big number. It just has to have some signal that there's something here that we should dig in on.
And the market size needs to be $100 million.
Multi-billion dollar market size.
Multi-billion dollar market size.
Yeah, we have to see, we have to understand how the company is going to get to 100 million in revenue in a reasonable amount of time.
Yeah.
With a lot of growth ahead of it.
And a reasonable amount of time for you is?
5 to 7 years.
Yeah. After the investment.
After our first investment, yeah.
And so how old would a typical company be by the time you really see them and you say, this is the Series A?
It depends on the idea and it depends on the entrepreneur. We've invested in things that are just off the ground, you know, basically not more than an idea. And we've invested in things that have been around for 3 or 4 years and now it's just starting to work, the flywheel's starting to move.
Yeah.
You know, here's an example, a company like Masterclass we invested in.
Yeah.
And if you know Masterclass, you know, they're getting the top experts in the world to teach online classes about that subject. These are typically celebrities that are just known as the expert in that subject. So, you know, Christina Aguilera teaching voice, Aaron Sorkin teaching screenwriting.
Yeah. Scorsese.
Scorsese doing directing. You know, you name it. They're getting the best of the best to create these amazing classes. And the first one was Dustin Hoffman. And when we invested in the company, we had not yet even filmed the Dustin Hoffman class.
Wow.
And we did not know, either are the classes going to succeed or are other A-plus, you know, expert celebrities going to want to do classes after this?
So at a point that you get involved, there's a lot of unprovenness about the business. What kind of sort of equity stake would your firm typically be looking for, you know, when you get into a company and being on the board of a company and shepherding it through and all of that?
It really depends. You know, I think historically it's in the neighborhood of 20% if we're leading the Series A. Sometimes when we do a seed investment, it's much less than that. You know, maybe 10%. We try and set up the company so that they're in a position to succeed on future rounds. There's enough equity for management and the founders. It's going to make sense for the Series B and Series C investors. There's a cadence to it. And it should feel right. The negotiation on that part of our offer shouldn't be complicated or dramatic. It should be actually pretty easy.
You're on the board of all of the companies you take positions
one of
in?
the 3 partners usually takes a board seat. In most of our investments, we have a board seat.
In most of the investments. What would you say as a board member of the companies you invest in is the most valuable thing that a founder can do to prove that they're watching out for the interests of everybody and doing a good job building the business? I
guess in a phrase is intellectual honesty. You know, I think you need to have the conversation openly, get feedback, learn, understand industry metrics, but just be very open about it. There should be never, you know, any other agenda that you're not sharing with the board member, and vice versa. There shouldn't be drama with the board member, right? There's not really a reporting relationship. It shouldn't work that way, even if officially that exists for governing reasons. It should be more of a collaboration, of a partnership. What is the very best way to build this company?
And when a founder hits trouble, what kind of signals should they be sending?
All right, so not if, when. Because startups are hard and complicated, and they always, you know, it's always like this, right? It's never straight up. So that's okay. We have all been founders here at Javelin, right? So we have all been through the ups and downs of startups, and we are quite empathetic to that. We know it's going to be bumpy. Let's just work it through when it happens. You're not going to shock us. Right? We want to know the bad stuff the second it happens, and let's help you work through it and you know, get that big outcome eventually when we solve all these things.
Tell me a little bit about the story of the founders. Actually, I think you had a company that you first did you first got involved with and set up was a hardware company.
Yeah.
Actually, you want to show
me? Yeah, I'll show you that one. I'll tell you about the others on the way.
Yeah.
So for me, I started the first online apartment guide, which was called RentNet.
Yeah.
We were the first to put up photos and floor plans and virtual walkthroughs, and got almost every apartment building in the country that had an advertising budget to spend money with us. And we signed a lot of leases that way.
Yeah, I'm familiar with it. I remember the days. Well, that was back in the late 90s or so.
That was in the 90s.
Yeah.
And then we eventually turned RentNet into Move.com.
Yes.
And Move.com was everything RentNet was, but also homes and mortgages and relocation services.
Yeah.
Built that company pretty big, ended up selling it to Realtor.com, who 5 years later changed their name to Move.com, and that is the company that still exists today.
Yeah. And then beyond that?
After that, I always wanted to build a hardware product, at least once. So I could, no matter what happened, I could show my grandkids, I built this, hold it.
Yeah, it's not like a web page, is it?
Right, and so the one I worked on, I was able to find a engineer who was developing a handheld device that you could hold up in the sky at any star or planet, push a button, and it would tell you everything about that star or planet.
Yeah.
And he had built a prototype in a garage that when I got together with him, we eventually turned into this product here called the Sky Scout.
And what year was this?
2003.
Several years before, the iPhone existed, 5 years before apps existed on the iPhone.
That's right.
Et cetera. So
this was one of the first products to use accelerometers.
Yeah.
And it could calculate how you were holding it, and it knew where the stars and planets were compared to where you were because of the GPS chip.
Yeah.
So we ended up licensing this to one of the big telescope makers and selling it for 7 years in all the stores you'd imagine.
Excellent.
It was a royalty style business, so it wasn't a big acquisition of the company, but we did get 7 years of royalties, and that was nice.
Yeah, excellent. And you mentioned another one of your partners was involved in another startup that reminds me of this map here.
So my partner Noah was one of the guys behind Keyhole, which eventually became Google Earth.
Yes.
And it helped run Geo at Google for a while.
Yeah, excellent. And massive success there.
And he also was one of the founders of MyPoints, which he took public in the late 90s as well.
Yeah, yeah.
And then my third partner, Alex, was the first employee at UMA, the VoIP company, which recently went public as well.
So not just founders, but founders of companies that had exits, which is seeing it all the way through.
Right.
Super.
Right. Yeah, and on all the ups and downs along the way.
Yeah.
And so we've learned a lot of lessons, and we've been there. We've been in their chair.
Yeah.
And so we have a very collaborative relationship with the founders, and we like to tinker. So we like that 10-minute, 10 o'clock at night, quick email or phone call where they're working through something.
Yeah.
We want to be on that phone. On that call, we want to be the ones they reach out to just help figure this stuff out along the way.
Yeah. You say it's mostly Series A, but you also do some seed. What are the check sizes that you look at writing for the seed and Series A?
Every now and then we'll do a really small one, like a 250, but in general a seed's probably more like $500,000 to $1 million from us. Mm-hmm. And again, it's because we pretty much know we want to do the A, or at least be a heavy participant in the A at that point.
Yeah.
We're not a big fan of the signaling risk.
Yeah.
That some companies take. Some VCs will invest a small amount, 250, 500, into the seed round with really no intention of
following on,
or even really following the company that closely until they get to the B or C.
Yeah.
And I don't think that's actually that helpful for the entrepreneur.
No, it's not. It's happened, I'm sure, to both of us experiences where you have a couple of really big name VCs throwing checks for a couple $100,000. Founder thinks it's great, but then when they don't follow through on the next round, it's a disaster.
Yeah, I mean, the other investors are going to be asking why. Why are they not writing a bigger check now?
Yeah.
What's wrong with you?
Yeah, so the party rounds are things you wouldn't want to be getting involved in.
Yeah, we rarely do that. Every now and then, if we just absolutely fall in love with something, we want to get involved early and stay involved. But that's our intention to keep investing. It's we never invest when we just intend to not do any more after that.
Yeah.
That's not us at all.
Yeah, great. Any last words of advice for founders if they want to get noticed by Javelin?
The best way to do it is to find an entrepreneur that has had an interaction with us, which should be pretty easy, and get a warm introduction, and figure out the right partner to be introduced to, whether it's depending on the business you're going into or who you think you're going to click with best, whatever it is. Reach out to us and we'll meet with you. We will hear the pitch. We will tell you very quickly either it does not meet our criteria for X, Y, and Z reasons, or this is interesting. And we're going to dig in. And the one thing we'll promise entrepreneurs is it's going to be quick either way.
Yeah.
So if we decide we want to do something, the process is actually very streamlined, because the second we know we want to do it, we want you back focused on the business.
Yeah.
And so we try to get you through the round pretty quickly and then doing what you need to do.
Well, thanks very much, Jed, for meeting with us
Absolutely.
today. You've done wonderful things for a lot of companies.
Thank you.
Wasn't that great? Wasn't that great? If you like that, you can subscribe. For every time you subscribe, I go like this. I click my heels because I'm so happy. Subscribe by clicking here and share. Thank you.